Hey traders, welcome to Charts and Copious Amounts of Coffee. Great to see everybody. Happy Tuesday, everyone. All right, so we have, let's jump into the calendar for a moment here. All right, don't need my mug there. Let's go over to our calendar. So taking a look at what we have today, Tuesday, and also, something to note when you're looking at the calendar is look back to what type of data happened in the Asian session, in the European session, in the UK session. We had manufacturing and non-manufacturing PMI. Some of the volatility that we saw last week, most especially in the 10-year notes, came from some of the warnings that we were getting about the state of the Chinese economy. So these numbers are probably a little bit more significant than the low heat hot zone that we can see here. Came out at 9:30 p.m. Monday Eastern, Monday evening. Going into Tuesday, going into really what would be considered the first day of the week. Although remember, we did have the futures markets open yesterday. And I said, hey, be careful because this is not broad expectation. We're going to see a little bit of the follow through from Friday's surge, which we did. And I'd say most, if not all of the strength we saw in that very illiquid Monday session gone. And we're looking at lower lows at the moment. Looks like that's what we'll be inheriting, but we'll take a look at the charts in a moment. Keep an eye also that today, Chicago PMI, CB consumer confidence numbers, these are the hot zones we have today, pretty minor ones. I think the first major hot zone we're going to have this week is going to be June 1 with ECB President Lagarde, especially if you are in the US dollar. Keep an eye on that, or in the euro. So keep an eye on that. ECB President Lagarde, ISM manufacturing PMI jolts. Are those important this week? Probably not as much as if they were not happening on the week of non-farm payroll. That's going to be the big number. Remember that the Federal Reserve, the U.S. Central Bank, has a dual mandate. They have not only the inflation mandate, which we obviously know, but they have a jobs and employment mandate as well, meaning those are their two focuses. And that is what we have this week by way of hot zones to keep an eye on. A couple of things caught my eye in the Twitter universe today. I loved this right here. Failure always precedes success. So right now, dealing with this downtrend has been difficult. Remember, you're in that process of learning. Learning oftentimes will come at the cost of being stopped out. Oftentimes dealing with downtrends, whether or not you're learning or whether or not you're an experienced downtrend trader like myself, you're going to get stopped out in downtrends because their nature is so much more volatile than uptrends. And then I loved this one right here, and I retweeted it this morning. The best way to stick to a long-term strategy, for me, that's typically going to be a position trade, my investment portfolio, is to stop looking at short-term trends on charts. Whatever your chosen time frame is, there's a time horizon that goes along with it. And if you start to mix, well, the 5 minute says this, but what time frame are you trading? Well, the daily, right? The 5 minute says this, but the weekly says that, or the 1 hour says this, but the 15 minute, the less you can do what is so often taught to us in the early stages of our trading development, multiple time frame confirmation, I will tell you that is going to lead you down a road of frustration, more so than just saying, you know what, I like a daily, and that's what I want to follow. And that's where all my decisions about targets and risk management and entries are going to be made. And I think that's going to be the better way to function in your trading life. So a couple things from the FinTwit community. I retweeted some of these. I retweet them as much for me as I do for anybody following me. It's just a great reminder of some great basics in this environment. All right. So as always, gang, the show is about your questions, and we're going to dive right into them. Kicking it off with, can I review UUP? Yeah, of course. We'll take a look at the dollar index, which, by the way, is also the DX futures. Now, notice DX futures are up. This is what we've been waiting for. if we can get that follow through back to the upside, because gang, regardless of what was happening at the end of May, whether you want to call the VIX, dropping from its highs, whether it was optimism about inflation, which is just ludicrous, whether that optimism about inflation mapped to, because this is really where the conversations have been happening, whether or not that optimism about inflation being under checks mapping to a change in the Federal Reserve's policy, that's not happening either. So whether or not this is just finally some of that reality setting upon the market, whether that be a technical reality, which is the markets are in generally a downtrend, got a heck of a reprieve the last week or so, but the macroeconomic picture, really, the needle has not moved. And so that brings us, what does that mean to UUP? It should start to resume its movement higher. And then on the flip side, when you take a look at what's going on in the euro, that should resume its movement. That's the 6P. That should resume its movement back to the downside. And this is just macro trends. And macro trends come primarily from the central banks, their monetary policy messaging, and their actual actions. The two big hot zones for this gang, Wednesday with Lagarde, I believe that's 7 a.m. Eastern, and then Friday, 8:30 with non-farm payroll. Either one of those could shed light on central bank policy and therefore the momentum and movement, Jose, of those two currencies. And you really shouldn't, and we really should never talk about the dollar without talking about the euro, because that is such a strong negative or inverse correlation. All right, next up, Delta. When it comes to closing losing positions, do I only manually manage them, or do I also have automatic stop loss orders based on the price of the contract as well? So how do I input my orders? What are pending or conditional orders by way of stop orders and limit orders? And what do I use alerts, a price-based alert at? Now, remember, a price-based alert is sort of the very initial part of what a conditional order is. In other words, if I have a conditional order, there's a price condition under which that order will be active in the market. That's how stop and limit orders work. So I'm just taking that element of the price-based condition and just making an alert. That's what I do most of the time. But when it comes to stops, what are the stops that I'll leave in the market as an order? Break-even stops, I will leave in the market as an order. And trailing stops make sense to leave in the market as an order. So those two stops. And when it comes to my options trading, Delta, furthermore, those stops are not based on the price of the underlying ETF or stock, or even the futures contract, if I'm playing options there that I am trading. It's based on the value of premium. So we place a premium-based stop. And on Thinkorswim, you can do that. And that's what I teach folks to do. That's what I do and guide folks to do in the Sector Secrets Mastery Room. Thanks for the question. All right, Danny, good morning. Recently, I heard you say I use historical volatility as opposed to average true range. That is 100% correct. As a new trader, can I please explain and also tell me where to find this data? So what's the difference? So an average true range is an indicator. You can Google ATR. And it's not even the calculation I have an issue with. I don't actually have an issue with the indicator at all. I just think there's something better. So an ATR is going to go back. On average, most traders use a 7 or a 14, or maybe if they're looking very long term, a 21 setting on their average true range. That means that's how many periods, that's how many candles they're looking back to understand this range of volatility, the average true range. Okay, that's a real basic explainer. Historical volatility, or known as a price movement range, of ATRs on one side, you have PMRs on the other. I used the latter. Price movement ranges, or PMRs, come in two flavors, the daily variety and the intraday variety. So right away, I'm able to segment the market down to the volatility based on time of day, based on day of week. So it's a much more granular data, and it goes back 6 months. So let's say on average, we're talking 20 trading days per month on average. instead of a setting of 7 or 14 or 21, and this isn't that simple, but I'm giving you some idea of what I mean by historical. So 20 trading days per month, 6 months, that's 120 setting, right? On if you want to think about it that way. But then we're also able to not only break it down to day of week and hour of the day, but we also break it down to a high, an average, and a low setting. And you'll see that on my charts. Now, I give members some insight into that via my hourly price movement range, which is something I created, at this point, I think 7 or 8 years ago in Forex, because I had this data in Forex. So yeah, it's just a matter of understanding that every market has a personality. And the better way to measure that personality isn't a very short-term look back, but rather a historical one, a longer-term one. So that's what I do, and that's where you can find the indicators that I've created that come from that information. All right, next up. So thanks for the question, Danny. Mr. Walker, when propulsion dots stack green, yellow, red on top of dark red candles, we're looking at a high probability of heading lower, and short the rip. That's what I'll be looking for. So anytime we have red, it doesn't have to be the dark red, although dark red is a down version of the red grab candle. The darker shade of each grab, G-R-A-B, candle is the down close. The lighter shade is the up close. So we can keep a little bit of that classic Japanese candlestick interpretation. So I use 6 colors actually, 3 primary colors, red, blue, and green, but the light and dark shade of each allow me to see up and down closes. And so it doesn't have to be dark red, Mr. Walker. It could be just red. But when we have those propulsion dots lit up, that means the 21, the 13, and the 8 EMAs are valid in such a way that the moving averages have crossed, price is interacting with them in such a way that the downtrend, the resistance is far more likely. All right, next up, thoughts on American Express. So part of the financials, much like many of the sectors and indices, financials have rallied, healthcare rallied. Some of this has been brutal for those, like for myself. It's just one of those things that remind us that downtrends are not kind to trend traders in the same way that uptrends are. But nonetheless, American Express, along with a lot of other names, are in downtrends in the financials. This one just happens to be stalled out just at or under the 200 propulsion. Those are the white dots there. And I would presume this would be a continuation of the downtrend, or at least exhaustion by way of reaching a high where there are obstacles overhead that will be more difficult to overcome. And that's how markets move. Can they take out levels to the up and down side? There seems to be a lot of pressure overhead. So is it an aggro entry? Now, the 200 would be pretty conservative. The 200 would be quite conservative. And I'd keep an eye on the gap close right around, there's 2 places you can look from where we are right now. I think we're going to have a little bit of trouble with 166, but it would not take me out. I think the next level to keep an eye on is maybe 162.80 and then 160.5. That'd be what I keep an eye on. All right. Okay, moving on. Thanks for the question, Keith. We have C. Dan asks S&P. Sure. So anytime we're looking at the, how did I do that? That's not what I wanted to do. Boom, there we go. All right, SPX, do I see them? Where do I see them trending? And what momentum indicator do I like to see on Thinkorswim? So trends. Well, Dan, number one, I don't need momentum indicators in a trending market. So that's a little bit of a mismatch for my style. If I have a trend, I want to find trending indicators. Now, the direction for the S&P, overall, I'm still quite bearish, the indices, gang. And that is not what I think or feel or my gut says or anything else. It's the fact that we had a downtrend. We had mostly red grab candles. We have yet to have a single green. So without a green, there's no reason to be bullish. So I remain directionally biased to the downside. And then the second part is I don't use momentum indicators in trends. In I actually use momentum indicators very rarely because I'm not a fan of buying while the markets are moving higher. I'm not a fan of buying while the markets are moving lower from a momentum standpoint. In other words, I'd rather buy when the trend is moving higher. I'd rather short when the trend is moving lower. And that's distinctly different than momentum. So, with that being said, I mean, what are some decent momentum indicators that I keep an eye on? Well, MACD is one of them, CCI is another. Um, so I'm always working on different things. I've played around with VWAP crosses, things of that nature for momentum. What else? Yeah, that's pretty much what you'll see on my charts. Yeah, so I try not to think about momentum in a trend, and because I don't want to be shorting new lows, I don't want to be shorting into bearish momentum in a downtrend. I'd rather wait for exhaustion in the ceiling and fade that move. And that there's no right or wrong there, my friend. It's just my preference. Yeah. So thanks for the question. That's an interesting one. Can we look at DHI? Yeah, we have a lot of situations where we have paper cuts, and it boggles the mind that certain stocks are still where they are, but it doesn't matter what I think the market should or shouldn't do. We have stop losses for a reason. We accept that we're going to lose from time to time for a reason because we are. No trading approach is infallible. No levels are uh, impenetrable. And downtrends remind us what a difficult terrain it is we travel. uh, Bulls will get slaughtered. They're going to find bulls are just absolutely going to get annihilated in downtrends because they're going to want to jump in on momentum like this and likely get stung, or they're going to pick a bottom and also likely get stung. So let's face it, if you're trying to run up the down escalator, I think over time the escalator is going to win. And it's no different in downtrends being a bull. Being a bear, though, in a downtrend is not a picnic either, because we have all these bottom picking traders out there and investors out there thinking they're the ones that are going to find the bottom in the market because that's all anybody talks about on the dumb box. And that's the television. And so there's this intense desire to find that bottom in a downtrend. This is the bottom. This is the reason why. And sometimes, like a blind squirrel, they find a nut. But what's oftentimes omitted is how many attempts it took to finally get that bounce. So downtrends are not easy for bulls, if not downright dumb to do. But it's not that much easier for bears. As many of you now know, we had a very nice downtrend in a number of corners of the home builders and construction. And yet, when the tide lifts for any number of reasons, it doesn't matter, right? The reality is right now, more buying momentum than selling pressure. And I just have to accept that regardless of how ridiculous macroeconomically it likely is, especially with June half point hike, July half point hike, September quarter point hike. And in this environment, we want to get long home builders and construction. But it doesn't matter, right? It doesn't matter. We just have to say, all right, wrong on that one, manage the risk and move on, right? Acknowledge it, manage it, and move on. UPS. Brian, I mean, it's UPS and a number of names in the IYT have bounced with the broader risk appetite that we saw. And UPS is actually sitting below a couple of Darvis levels, as well as inside the wave in a double red. So that would be a short. That would be a short the rip. Long puts. Yeah, that would definitely be short the rip. Long put based on the structure of the colors, the wave, the structure of the trend, the resistance levels overhead, etc. Gold is also a short, but Donald, a number of the names that we've talked about today, I have no position in. I'm just reading the tea leaves, so to speak, to say, hey, this is what the indicators are suggesting is the path of least resistance. But GLD, I have a position in, and it is short, downtrend, 200 propulsion, 200 EMA, and then resistance, or at least a zone of resistance. And then finally, I'm still quite bullish on real yields, which means I'd be bearish on gold. All right. So those are the things that we're dealing with right now. What does a pullback on low volume mean? What that simply means that there's less participation. I mean, volume is participation. And volume is attention. That's what it really is. So if we're pulling back or rallying or doing anything on low volume, that just means that very few trades are occurring or having to occur to reflect what's happening in the market. So think of it this way, like anything that's low participation and also then low attention, how much trust do you have in that move? Is it really reflecting a broader opinion? Right. So that's why bank holidays are tricky. They're not reflecting a broader opinion. That's why illiquid trading days are tricky, because they're not reflecting the broader opinion. Doesn't make the price action any less real. It's just more questionable that when the broader opinion comes in, when the participation, the volume, and that attention comes in, whether or not that broader group of people are going to think the same way that that smaller minority did. That's all. That's what that means. So thanks for the questions, gang. Great stuff. As always, thank you very much for being here for Charts and Coffee. I'll see you all tomorrow. Same station, same time. Be good to each other.